Welcome to another episode of Market Money. It's my pleasure to be here with you for another week. So today we're going to be looking at actually, as I was thinking about what to cover for this week, I remembered um, that there was a very interesting piece of news that came out last week that I thought would make an interesting topic for an episode. And that would have been the announcement by Sagicor. So let me bring that up 1 second here. So it says here, let me share my screen. So this is small, so we're going to zoom into the document a little later, but it came out on June 7th, and it speaks to a reorganization. So it says here that Sagicor Select Fund Limited announces its strategic decision to convert its Sagicor Financial Select Fund, that's Select F, to a unit trust subject to obtaining the necessary legal, regulatory, and shareholder approvals. The investor release can be viewed at the following link. So that's what we're going to start the episode with, and then we see where the conversation takes us. So we're going to look at, of course, the select funds in terms of the stock, how it's been performing, etc. Just talk about that for a little bit. But that's going to be the main topic of today's episode. If we have time at the end, I may go through some of the other things I think are interesting in the market right now. So let's get started, really. Right. So it says here that that Sagicor Select Funds, the investment company which operates two exchange-traded investment funds, that's of course Select F and Select MD. So for those who are unaware, the Select F is expected to, was built to mirror the Jamaica Stock Exchange Financial Index. And then, of course, Select MD was built to mirror the Manufacturing and Distribution Index. So that's how they were built. And it uses the term here, exchange-traded investment funds. And so I won't get into the nuances of that here. So for now, let's just say it today announced its intention to undertake a strategic reorganization subject to obtaining all the requisite approvals that would result in the funds being converted into two unit trusts registered with the Financial Services Commission and governed by the securities regulations, right? So it wants to take these existing funds that are listed on the Jamaica Stock Exchange and traded on the Jamaica Stock Exchange and have them converted into unit trusts, right? So that's what it wants to do. So this reorganization was discussed and approved by the boards of the select funds on May 8th, 2024, and is considered to be in the best interest of the fund's shareholders. All right, so let's go through a little bit of the document here. Again, we're going to spend most of the time here, so there's no rush. Just so that we understand clearly what the document says, then we'll look at some information about the funds themselves. All right, so it says here it was incorporated on January 2019, and I believe they did the IPO for Select F later that year. So since its incorporation, it has launched two separate investment funds, the Sagicor Select Financial Fund and Sagicor Manufacturing and Distribution Select Fund. Both funds are currently listed on the main market of the Jamaica Stock Exchange, and the price at which the shares of each fund trades is at a relative steep discount to the published net asset value, right? So in the case of the Financial Select Fund, the discount to NAV over the last 6 months range between 17 to 35%. And in the case of Select MD, the discount to NAV has been somewhere between 40 to 45%. So it's saying that here the NAV at which the funds hold, the stock is not trading anywhere close to that, right? So it's trading at a significant discount. And so that's a part of what goes into the decision to make this change, right? So the directors believe that the steep discount at which the shares trade is primarily due to the illiquid market and weak demand for shares. A shareholder who wishes to sell his shares in a fund therefore has to reduce his asking price to attract buyers. If the funds were unit trusts, then investors would have the option to purchase or redeem the unit trusts at the NAV, subject to possible fees and any other restrictions. So this is important, right? So And that's how unit trusts are expected to work. Whatever is the NAV or value of the unit trust, whenever you're ready to sell it, you can sell it at that NAV, right? So you don't have to. Unit trusts are sold directly to the broker and bought directly from the broker, right? So it's not subjected to be traded on a market where a buyer or a seller may vary in terms of the price that they want to pay for shares, right? So that's what it's saying here. The benefit to shareholders is that the units held in the new unit trust will be priced with reference to the NAV, thereby reflecting the underlying real value to investors, right? So what I think it's saying here is that, so let's say that you currently own shares, which they say here are trading at a discount, in some cases, 30 to up to 45%. Then once you hold those shares, when it converts to the unit trust, I'm assuming it will have like the same number of units as the shares outstanding, etc. Maybe that's addressed later on in the document. You would be able to now sell those shares if you are already at the NAV. So you don't have to worry about it trading at a discount anymore. You're ready to sell, you sell it at the NAV. You're ready to buy, you buy it at the NAV, right? So after due consideration, the board has determined that the conversion of the two funds to unit trust is the most effective solution issue facing shareholders. The conversion process will be undertaken as a court-approved scheme of arrangement involving the following steps. First, the FSC would be asked to approve the two new unit trusts. So what they're saying is here, by the way, that they're a ways off from this being a reality. I mean, I'm assuming that it's going to take some time. I've been hearing that approvals aren't necessarily at the same speed, of course, as you know, the FSC is dealing with the SSL issue. And so I've been hearing, I have no proof of this, of course, that approvals aren't necessarily at the same pace. So let's just assume this may take a few months, right? Next, Select Funds would file an application to the court to summon a meeting of the shareholders in both funds to vote on the conversion plan. So they'll call the respective shareholders, have a meeting. Shareholders will be able to vote as to whether or not they agree to the conversion of shares to a unit trust. So you, if you're a shareholder, will have the opportunity to vote as to whether or not they will be able to do this. Subject to the court granting the order, a shareholders meeting for each fund will be convened, at which the holders of shares in each fund will vote on a resolution to convert their fund to a unit trust. If a majority in the number of shareholders in a fund holding in the aggregate not less than 75% of the votes cast, which means if 100 people show up to that meeting, it can't be less than 75% who votes in favor of it being converted. If it's less, then it wouldn't be approved. Following the meeting, a report of the results of the vote of each fund would be made to the court, and if a resolution in respect to a fund were passed by the requisite majorities, then the court would be asked to make an order approving the conversion. So they're just kind of detailing the process there. And then, of course, next step is to go to the company's office, because what they would have to do essentially, the publicly listed company or the fund that is Select F&MD, now they have to go through this process, of course, to the company's office and so on and so forth. That's what they're saying there. Then now the existing shares would be canceled, and each shareholder in a converted fund, which would be issued same number of units in the corresponding unit trust. So that's what I was expecting to see. So if you own 1 million Select F shares, you'll have 1 million shares in the new unit trust, right? Which just makes sense. It's simpler to convert. Nobody has to ask, what has happened to their shares if there was some multiplication or division, right? Each unit trust will be managed by Sagicor Investments Jamaica Limited, and the trustee is proposed to be the JCSD, right? On conversion, given the investment strategy of each unit trust will operate as a non-diversified unit trust. The unit trust will be more actively managed and will consist of an appropriate mix of the listed companies within the financial sector and the manufacturing and distribution sector. So I actually like this, and I'm noting the wording here, right? I actually think this is a good thing, right? So it says here, the unit trust will be more actively managed and will consist of an appropriate mix of the listed companies within the financial sector and the manufacturing and distribution sector. Now, this is how I'm reading this. I hope to speak to somebody from Sagicor to see if I'm right. I'm reading this to say, so in the way that it's built now, Select F, I believe they have to include all the companies in the financial sector. And one of the things I've always thought is that there are likely some companies that I would not want in that fund for obvious reasons. Same for the manufacturing side. It could be for the diversification. It could be based on the weighting and other reasons, right? So what this sounds like to me is that instead of now, because it's not going to be a fund that was created specifically to mirror the index, but instead a unit trust, they should actually have more flexibility in how that unit trust is composed because they have full control, right? So that's how I'm reading this. You tell me what you think if you're interpreting that in the same way. And I see that as a good thing, right? And we look at the fund shortly. I've always thought the weighting, the total number of companies being included, etc., was just too much. And what I mean by that is, if you look at how there is such a thing to me as being too diversified. So I thought the funds, as they were constructed, were too diversified, right? So I think this is a good thing. If I'm interpreting this right, by the way, I may be wrong. You tell me what you think, those of you who are listening, because I might be reading this wrong here. And then Jay says a new offering circular and trust deed will be issued, and each converted unit trust will be relaunched with a view of to expanding its investor base, right? So, okay. So just some other things here. We're more than halfway through, so let me just quickly get through this. So it says this investor release does not guarantee the conversion of the investment funds because, of course, they mention the process, approval, shareholders vote, etc. Mr. Colin Steele, chairman of the company, in commenting on the plan, said the reorganization of the two funds will, with the result that the manager of a unit trust will stand ready to redeem units at their prevailing NAV, means that the unit trust should no longer trade at a steep discount to the NAV of the unit trust. I'm hoping that all shareholders of a fund will support the reorganization and come out and vote for this change. And those who cannot attend the meeting will appoint proxies on their behalf to vote, right? And this is just notes, I believe. And this is the NAV for both funds. Well, this is for Select F. So it's showing you here the NAV and then the trading price. So you're seeing at all points there's a discount. Now, I'll talk about the impact of this very soon because, of course, there has been some trading activity since the release. So, of course, the gap that they're referring to here, let's see how that gap continues to exist, right? Because, of course, the conversion means that there is a benefit, like a baked-in discount if you're a shareholder right now. That's the way to look at it in terms of an opportunity. But of course, if it continues to or starts to trade up and closes that gap, you just of course have to be careful because you may miss out on what they're intending to by doing the conversion, depending on whether or not you own shares already or you plan to buy shares, right? And this is for Select MD, which of course you see the more dramatic difference in terms of trading price versus NAV and so on, right? So let me see what this says. That's just the disclaimer. All right, so hopefully that has made sense so far. So let's have a look at the funds themselves. Let me just try to go to the last quarterly report for both Select F and Select MD. So let's start with Select F. That makes sense. Let me know if you have any questions, guys, and I'll try to answer them. So Car is asking, what's the rationale or benefit of the conversion for existing shareholders? All right, so Hopefully you would have gotten this answer already, because I've been talking for a while now since you asked this question. But essentially look at it this way. So how the shares are currently traded. So they have this net asset value that the trading price is less, or it's significantly less than the net asset value. So the net asset value is considered to be the fair price of the fund, right? So because it's trading at a significant discount to the fair price, they're looking to convert all the shares in the fund to units in a unit trust. That way they're able to capture the fair value, and it can always be sold or bought at the fair value, right? So the opportunity that presents itself for existing shareholders. So if you own shares now, of course, we're not getting into when you bought the shares, right? Because we're talking from this point. Now, if you owned it at IPO, you'd still be at a loss, right? But let's say you were to own shares at the current price, right? That's your starting point. Then you'd be able to capture that gap between what is considered the trading price now and what the net asset value is, right? Let me know if that makes sense to you. So that 30 to 35% and that 40 to 45% discount would be what you would make when it's converted, right? So that value would be captured in that way. And they're doing this to, I imagine, counter the many questions they might have had at their AGMs and otherwise about why is it trading so low, why is it so below the NAV, etc., etc. So there are 3 companies, I believe, that publish NAV: Select F, Select MD, and I think QWI. So hopefully that makes sense, and that's what they're trying to accomplish. Trying to adjust this camera here. Okay, perfect. Okay. All right. So let's start with Select F. Let's look at their. This looks at Q1 2024. So let's start there. Of course, I'm getting this information from the JSC. So if you want to look at these reports as well, that's where you'd go, right? So we're just going to be looking at the performance. Hopefully there's some information on the composition in the quarterly report. If it's not there, I'll go back to the prospectus, right? I'm not going to read the macroeconomic overview. I'm just going to focus on the performance of the fund, right? Well, this looks relevant here, right? So the finance and insurance industry grew 3.5% year over year. Oh, well, that's pretty much it. That I don't want to cover. Let's see here. I'm just looking at some of the information here. All right, so this is just showing the prices of top 10 performers in terms of financial companies. So this is Select F, so I'll focus on the financial side. So in terms of, we've seen improvement in some, and again, this will give you the idea as to what the challenge is currently with the fund. Look at the top 10 performers, right? The first 5 have positive growth. The second 5 have negative growth, right? So if you look at it this way, and this is something we teach actually in our investment community, if you have, let's say that you had only these 10 stocks within this fund, when you average out the gains from all 10, the negative is going to pull down the overall gain because of how many are in negative, right? Hopefully that makes sense. So this 34%, 20%, 12%, 7%, 6% is going to be now impacted by the -4, -5, -7, -8%, right? So your overall gain for the portfolio would be impacted because not everything is likely to perform well, right? Of course, there are benefits to that, but there are also downsides to that, right? So this just gives you an idea as to what you're working with, how the fund is currently structured, right? So let's go through this because we're looking at the performance of the fund. So it's for the first quarter, Select Fund recorded a net profit of 3.12 million, right? This improvement was principally due to dividend income of 11.76 million, resulting in total revenue of 8.58 million. So I'll get into why this is important soon. But of course, $3 million profit for a quarter. To me, when you look at the number of shares, it's just, yeah, I won't go there yet. Total expenses for the quarter amounted to 5.46 million, a decrease compared to the 6.21 million recorded for the corresponding quarter in 2023. This downward movement was largely due to legal and professional fees decreasing by 39% year on year. Management fees declined by approximately 10%. And at the end of March, total assets were valued at $3 billion, right? We're going to look at the balance sheet soon. So it says here the funds invest in a representative sample of the securities held in the respective indices that collectively has an investment profile similar to the indices. Due to the representative sampling, the funds may or may not hold all the securities that are included in the respective indices, right? Let's go to some other information here. Yes, exactly, Glenroy, right? Drop in the bucket, exactly, right? So let's see here, key facts, listing date, asset class. Okay, we're good there, right? So this is showing you how, I mean, and again, this kind of makes sense, right? That it would trade, the select FNAV will trade in line with the financial index. So we can look at that a little bit more. Okay, this is what I wanted to get to, the portfolio weighting. All right, so again, if you think of how the funds are meant to work, they're saying they have a representative sample of the JSE Financial Index. So what this is showing, you know, if you think of the portfolio as a whole, all of these stocks, right, make up the select F fund, right? So this is 5, this is 11, 15, 20, 25, let's say about 28, 29 stocks, right? So again, that kind of explains what I was saying before. If you just look at the change in price, that we're only going to focus on the change in price over this side, the Q1 price change. So the price change here, most of them are negative, right? So the performance of Scotia Group would have been positive. Most of them are negative, right? So again, if you just look at it from that perspective, how it's currently constructed, this is the potential impact, right? So the index weighting is here because not all of the shares are of equal amount, right? So if we think of the pie as 100% in terms of portfolio weighting, and again, this is interesting to me because we looked at portfolio weighting for our May monthly investment challenge. So those of the community who are in the challenge should understand this very well. But the portfolio weighting will add up to 100%. So if you add all of these amounts here, you'll get the total amount of 100% that the fund is made up of. And so of course it is going to be, so let's say that there's 18% of the fund in shares for Sagicor Group. If Sagicor Group pays a dividend, those monies come in as income to the fund, and then that would be distributed to shareholders, of course, after, you know, expenses are covered, etc., as a dividend. So when you combine all of the income from all of the companies, they deduct, of course, their fees and expenses. I think there's a management fee. Then that would be distributed to investors as a dividend, right? So whatever income the fund makes, the rest is distributed as dividend, I believe, right? So Kenny's asking, will the shares be delisted? I would assume so based on what I'm reading, it would have to be, because it can't exist on the exchange as a fund and be a unit trust at the same time. Unit trusts aren't traded on the Jamaica Stock Exchange, and so it should at some point, I expect, be delisted, assuming that everything happens according to plan. But in this case, it would not be a negative delisting, like a forced delisting. Would have been an approved process by the shareholders and them making the decision to convert it, right? So this is a weighting for the fund. So if you look at the top 3 companies here, right, let's say about 19% each, that's about 57% of the fund weighted in these 3 companies, right? So almost 60% of the fund, and then the other 25 companies make up the other 43%, right? So that's how you should think of it. So let's say that, and I use this example, I think, when I did a review of the stock. If let's say that dollar financial services here, which is 0.05% of the fund, if dollar has an amazing year, stock grows significantly, dollar pays a massive dividend, the impact to Select F is going to be very small because it's only 0.05% of the portfolio, right? So I'm hoping, and this is one of the things I'd be interested to see, if when they convert to a unit trust, if they're still going to have the same number of stocks, right? Because again, there are certain companies here that I'm not sure if they intend to keep the same weightings or the same allocation to all of these companies, right? That would be interesting to find out. I don't know if that's something that would be voted on as well, because the truth is you don't really have control over how brokers would compose a unit trust, right? They would typically just tell you how it's weighted and that's it, right? And it's usually a very high level weighting, like they may say equities or real estate or something else, right? So I'd be interested to find out if they plan to maintain the same weighting and just convert to a unit trust. That would be interesting to see, or they're going to change the strategy altogether. That's one of the questions I would have. Okay, so let's look at the performance here. I'm not going to focus much on assets because you're not going to see much here, right? It's not going to be investing in like infrastructure or inventory or anything like that. So that's what you're seeing here. So you may say it's a very light balance sheet, and that's based on the fact that it's a fund, right? So let's go to the profit and loss, which is where I'm more interested in, right? So it says here, net changes in fair value on financial assets at fair value through profit and loss. So that would be, let me see, it's in thousands. Okay, so this would be negative 3 million for Q1 versus negative 246 million. So improvement there. Dividend income though was less. So again, you have to look at it this way. If the financial sector, all of the companies in the portfolio don't pay dividend or pay a healthy dividend, that impacts their dividend income, right? Interest income is 278,000. Net investment income is 8 million, right? So would have read that earlier. Versus last year, the loss was 231 million, right? So that would have been a significant loss for last year, and that would have been, reflecting as to the state of the market of state of the financial index at that time, right? So administration expenses, out of the 8 million in total revenue, 5 million came out as admin expenses. And so net profit or loss would have been 3 million for the quarter, right? So I may want to look at the financial year, but I think this is the full year. Okay, perfect. So they would have lost 523 million for last year, right? So that would be, of course, I'm thinking probably the main reason why they're seeking to do this conversion as well, based on the magnitude of this loss here. Positive EPS for the quarter versus a negative 5 cents for the same period last year. And let's see here in terms of cash flow. I think this should be simple as well. Yeah, right. So very easy company to understand, I think. Oh, this is a cash flow statement. What was this one? Oh, that's the changes in equity. Forgot about that. I'm looking to see anything that I don't want to highlight here. So no dividends were paid last year. Let me see the last time they paid a dividend. Hopefully that shows. The last dividend was a 1 cent dividend that was paid in December last year, right? They paid a dividend each year, but just about 1 cent each year. In 2021, it was 0.005, and in 2019, paid a 1 cent dividend there as well, right? So That's what we're seeing. Yeah, so I'm just looking to see if anything that I want to highlight. Their dividend received this year is higher than last for the same period. And of course, cash and cash equivalents would have decreased for this part here. Let me see anything else that I want to highlight before we go to select MD. This is top 10 shareholdings here. Okay, all right, so let's look at select MD, guys. Again, let me know if you have any questions. I'll try to answer them as I go. It's still very early, of course, so there are a lot of things that we may not know at this point. Let me do this because I want to look at how select F has been trading. So let me actually do that as well. So it's been trading, let's look at the last 6 months. 6 months ago, it was trading at 38 cents. It's now trading at 50 cents. So the year-to-date increase is 28%. So again, depending on your starting point, because the IPO was at $1, I believe, or a little above. I don't remember what that was. So it's still a ways down from its IPO price. But of course, recently it has seen some increase here. So week to date, month to date, quarter to date are all positive, which is a move in the right direction, and 5.1 billion units outstanding, right? So the unit trust, when converted, would have 5.1 billion units, right? And you're seeing here just the earnings over the last 4 years. So a lot of negative quarters just based on, again, the season that we've been in since the pandemic, of course. So the highest loss would have been for Q1 2020 because, of course, COVID was March 2020. And so, more quarters in negative than positive. And of course, that would, I think, be a big part as to why it's trading the way that it has. All right, so let's look at select MD. This is for first quarter as well. Limitless is asking, do you think this is partly because of the activist investor, Mr. Staple? I don't know, right? I do know that it's really been a point of contention over the years. I have spoken with persons from Sagicor as to, just wanting to understand how the fund is managed, what goes into the decisions for, how the shares are allocated. I've tried to do my own research to understand what goes into it, because I've always thought the weighting in terms of the allocations significantly impact its performance. So if we go back to the portfolio allocation here, this page, right? Portfolio information. Again, just a simple example that you could have, what are the companies that have done really well in the last year or 2 years, right? If you look at those companies, well, I guess the overall financial sector has not done really well. But the idea is based on how many units or how many stocks are within this fund. It's not likely that you're going to have 28 stocks doing really well, even if this wasn't coming out of a pandemic, right? So based on the share allocation or distribution, I've always thought the weightings make it challenging to capture where the market may be going. So for example, one of the questions I asked in the past, if so let's say you might have a company that does, so for example, I know there would have been periods, I think Barita is one of the, Barita on this list is probably the stock that's trading at the highest price, right? But it's 7% of the portfolio. If Barita stock price doubles, its weighting in the portfolio is only 7%, right? So if this was their own portfolio, one stock did really well, it would, of course, not, you won't see that dramatic impact unless its weighting is higher, right? I should bring on a Sagicor employee to speak about it. I'll try. I'll try. If you remember when I interviewed Chris Zaka, I did say to him that I was interested in speaking to somebody from the team about it. I'll try to reach out and see if it's possible. What I'm hoping is that they won't say, you know, they can't talk until the vote, etc. So I was kind of waiting to have that process reach further down the road so that we can get more information. I'm not necessarily wanting it to be that they come and then they're only able to speak to what's in the release, especially at this early stage, right? So I want to be able to give you guys valuable information. So if I can't do that, I feel like I don't necessarily want to waste an interview, if that makes sense. So we'll see how that goes. All right, so let's look at Select MD. We have just about 20 minutes to go. So I'm not going to go through the introduction, but just know that Select MD is weighted to the manufacturing and distribution index on the Jamaica Stock Exchange. So everything that we discuss with Select F, just look through the lens of the manufacturing and distribution sector now, right? Which I believe would have performed better than the financial, right? And you're seeing this here, right? If you know the top 10 performers, when we compare that here, so even this part, right? Top 10 performers, you notice for Select F, 5 positive, 5 negative. When we're looking at Select MD, they're all positive, right? The top 10 performers in the last for Q1 all experience positive growth, right? So that should show you the difference in terms of performance for the two. And I think overall, the manufacturing sector has done fairly well. Fosterich is not in the top 10 now, but a year and a half ago, Fosterich had a really great year, right? You know, they had the stock split, etc. So of course, I'm assuming that Omni, well, will Omni be added? I don't know if they'll add any new companies until they do the conversion. That would be, you know, interesting to see. I don't know, because we know that Omni just listed. So we'll see, right? Top 10 performance here. Of course, you know, I love to see this list. We'll talk about this list another day, right? But it's good to see some stocks in my portfolio on this top 10 performance list, right? All right, so it says here, let me see if there's anything relevant to what we want to discuss. Talking about inflation, financial performance. Okay, let's start here. So they recorded a net profit, the manufacturing and distribution select fund, and again, note the significant difference in profits, right? So 46 million versus 3 million, right? For the first quarter of 2024, the profit was principally resulting from the unrealized gain of 21 million and dividend income of 28 million, right? So you're getting better ROI from the Select MD. Total net investment income was 53 million for the quarter. Total expenses amounted to 6 million, a decrease compared to 6.7 million recorded the previous period, right? Management fees increased by 1%. Irrecoverable GCT increased by 6%, right? These are some key metrics here. And this now you're seeing a difference in terms of the NAV. So the NAV is the green line and the index is the other line, right? So you're seeing more of a gap here in terms of how it's trading based on the performance of Select MD in terms of the fund itself. So of course, I think this gap, do I want to go down that path? No, let me leave that for now. And let's look at the composition, right? So this is now the portfolio for Select MD. And of course, pay attention to the weighting as well, right? So we had the weighting for Select F that we looked at. So these would be the companies in the manufacturing index. I mean, quite a large number as well. I'm going to try and count it. 1, 2, 3, 4, 5, 10, 13 at Massey, 15, 20, 26. Wow, over 30, right? So again, a large number in terms of stocks. So just imagine if you have the fund, you own all of those stocks in terms of different weightings, etc. Right? So the top four, with Cinco, Grace Kennedy, Carreras, and Carib Cement make up 21, 29%, about 50% of the portfolio weighting versus the index weighting, right? So this is the JSE index and it's weighting for that. So for example, for the index, Massey would be 24%, but in Select MD, it's only 2%, right? So it's not, so that's just something to bear in mind, that you may have a company that's larger in weight for the index, but not large in terms of weighting in Select MD, right? Again, I would love to know what goes into the decision for the different weightings. I don't know if it's based on market cap. I don't know, right? Well, it wouldn't be based on market cap because I think Massey might be higher, if I'm not mistaken. But again, the same concept here would apply. If you look at the price change over quarter, you're seeing that impact here. So Lasco Distributors 63%, but it's only 2.8% of the portfolio. All right. Let's have a quick look at the financial statements for this one. Similar makeup in terms of balance sheet, except I believe we're seeing retained earnings here, whereas we didn't see that for Select F. And it may be, let me check here, is this Select MD? It's very safe to assume that they may have more profitable quarters for Select MD, right? Waiting for it to change. Did I not select it? Okay, I'm not seeing the page update. Is this it? Yes, perfect. All right, so we're seeing more quarters positive compared to what we saw for Select F. So if you were to compare the two, Select F versus Select MD would have performed better over the last 4 years, right? And then, of course, I think that would show you as well that the price is different. 90 cents for Select MD, 50 cents for Select F, right? I'm interested mainly in the profitability, of course. So let's look at it there. 46 million in profit for this Q versus for last year, $111 million loss. And for the year, 191 million for 2023 in terms of profits, right? So again, we see where Select MD is performing better, EPS of 1 cent here. Have they paid a dividend as well? Let's just check here. It's a lot easier. They have paid a dividend. This dividend is 3 cents. And we see that is actually an improvement on the previous year. So it's maybe at least almost a 200% increase in dividend. Again, just based on, I think, how the sector has been performing. All right, so I believe that's it. I'll try to do a proper review for both. But the truth is, it's a simple stock to understand, using the term loosely. And I think overall the change is a positive one, this move to a unit trust, because I think you're always going to have the issue as currently constructed about the gap in terms of trading for the NAV, trading separately from the NAV. I believe even when it just came out, when it IPO'd, even before the pandemic, it wasn't trading anywhere close to the NAV, right? To my understanding. Let me check if it ever traded above NAV. I don't believe so, right? Maybe in the earlier days, and that was like right when it just came out. I'm gonna try and check my account on Ticker. Let me see, select F. So I'm trying to go back to as far as I can, because I don't think. Does anyone remember the IPO price for Select IPO? So I'm just trying to find the information for the IPO because I believe the IPO price was $1, but I'm not sure. I want to verify pricing dollar per share for Select F. Let me see, Select MD. $1 per share as well. Okay, perfect. So IPO was $1 per share. Let me look at if it's ever in its history traded above. Is there a quick way to find that out? I'll try. If I can't find it in the next 30 seconds, we move on, right? Yes, guys, so Kevo, you're seeing me do this live, so that's why you're kind of, because I didn't prep for this session beforehand, I'm doing everything live. So hopefully it's helpful to you. But this is how my brain works. As I try to find information about the company, this is exactly what I do in my own time, right? So let's say the IPO was, can we find NAV history? Let me see how far back it goes in terms of NAV. Let me share my screen again so you can see what I'm doing here. So I'm looking on Ticker. So we go back to December 2019. So the IPO was at $1. I think the peak it's showing here is $1.13. That's what I remember. So even back then, it was, I think it went slightly above IPO price. So this was just like a 13% from IPO. And then even again, before the pandemic, we're seeing, this was February 2020. This was $1.04. So it would have been 4% up from IPO. And so, of course, when March came, it would have significantly impacted it. And it's been down for a while. But I remember even then, there was a lot of conversation about it not trading close to NAV. Right. And I remember we're having these conversations about it compared to QWI, etc. Right. So I think this challenge that they're trying to overcome by ensuring that you capture value by it being able to trade at what's considered the fair price because of how unit trusts are meant to work. But this, of course, being what it really depends on your starting point. So the value here, I think, are for maybe shareholders who would have maybe joined later on. Because if you were joined via IPO and you did not average down, you have a chance, I think, to maybe get back close to profitability. Of course, if you follow the investment principle of averaging down, then I think you have a good opportunity to see some benefits through this conversion. Again, everything is subjective to where you started on the journey, and so bear that in mind, right? So yeah, but I do remember a lot of conversation around it trading to NAV and so on and so forth. So hopefully this was helpful, guys. We are hopefully going to be resuming our Market Money weekly episodes, but I really can't. I don't know. I don't want to get into it now, but I've been trying to figure out the time and impact, right? So I would actually really could benefit from your help here. So if as a community, you all can tell me the type of things that you'd be interested in us covering as Market Money, because the truth is I want to do more content like we did tonight. I don't necessarily I want you to be able to watch the episodes and leave with something valuable that you can go now to impact your portfolio. I think that's where I'm trying to go. And so I was trying to see if what we were doing in terms of how the episodes were currently constructed, if we were providing that value. I wasn't sure. And of course, the impact of just not everybody being interested in the same way in investing right now. So of course, a lot of my time was focused on the investment challenge, right? So, but at the very least, I think there are some opportunities now for lessons that we can go to, like we did tonight, that can help to educate you about something. And then you can see that meaningful result in your personal investing and, of course, hopefully your profitability as an investor, right? So I'll do another call for questions. Let me check on Instagram, see if I have any questions there. And let me know, those watching, if you have any questions, and I'll try to answer them now. Don't see any questions on Instagram. Okay, Barley was asking, I joined late. What is the name of the company? We're going through the select funds. Hopefully you would have caught that, Barley. And I think we covered everybody's questions here. Kemo is saying, this is good. It empowers us to do the same. That's what we're hoping for. And so, I mean, I'd invite anyone here, if you want to get into research similar to what we did tonight, this is what we do in our investment challenge. If you're on our mailing list, we sent out an email 2 Saturdays ago inviting persons to join the challenge. We're halfway through the challenge for 2024. Last month, and we covered portfolio construction. So we spoke about how to compose your portfolio. We looked at 3 categories of stock on the market. We looked at value stocks, growth stocks, and income stocks, right? So we spoke about dividend investing quite a bit. We looked at I believe, Dolphin Cove as the example, because I was showing the group that, you know, in the last 12 months, Dolphin Cove has paid, well, it's about to pay its 4th dividend, right? Which I think is just awesome. You know, I love dividend stocks. And so the fact that if they are paying so many dividends in this period, it has also helped their share price. So I'm not going to go through it for this video, of course, because the topic is Select F. But have a look at Dolphin Cove and you'll see its dividend consistency. And I believe IC Insider did an article to say, calculating the yield, because they've paid 60 cents per share 4 times, which is $2.40 in the last 12 months. And so if you look at that yield based on the current price, it would have been a 10% dividend yield, which is just amazing in this market right now, right? So we looked at all of that for our last monthly call. So the challenge is ongoing, right? So we have a monthly call. It's at the end of each month or whenever we schedule it, because sometimes we have it at the first week of the month or the last week of the month. And we issue challenges. So for example, last month we challenged the community members to take profits from their portfolios. We don't tell you how to invest. We just pretty much teach you, have discussions, and we kind of look at companies together as a group. So you can join the challenge anytime. When you join the challenge, you have a one-on-one with me. We set some goals for your investment portfolio. We do this initial, I wouldn't want to call it an interview, but you have a one-on-one with me. We look at your finances briefly to help you prepare for the challenge. Then you get access to our challenge platform, which is our Learn, Grow, Invest Academy, where you get access to all the monthly calls, all of the assignments, etc. You join a private WhatsApp group, and then you are able to join on the monthly calls when we have them. So we're just covering investing all year, every month. And so by the end of it, you should be pretty confident as an investor in terms of your personal strategy, how you do research, how you take profits, and things of that nature. Thank you, Renee. So Renee just shared the link here. So challenge.learngrowinvestclub.com. You can go there. You can sign up. It's $30 a month. I want to be transparent about that. And that cost is really to cover the cost of our platform, which cost us, it's our most expensive subscription, but it's an investment for us in terms of making it possible for you to get access to the information in a nice and easy way. And so you can join the challenge anytime. There's no limit to how many persons can join because it's a very small group now, actually. I think we have 13, 14 persons, right? And we actually initially wanted to go up to about 25. So we have a good enough size group where you won't feel like you're trying to compete for attention in terms of what you're trying to focus on. And the call is usually about half of the group at any given point, and of course a lot of people will watch the recording, right? So yep. So to close out, let me just recap the episode. Thanks for that interest, everyone. We're talking about the Sagicor Select Funds, their strategic decision to convert its investment funds into unit trusts. So my thoughts overall, it's a good move. It's able to capture value for shareholders in terms of what the current price is. And if it's able to convert in the way that they're expecting it to, you'll be able to capture that value, of course. My concerns or questions that I would have for the Sagicor team: how will the fund be constructed after the conversion happens? What would that look like in terms of administration costs? Is it the same fee structure? And I would assume that they would delist. I kind of see that as obvious, but of course we can confirm that. This was a question asked by Kenny. It makes sense for them to delist, of course, because it would be a unit trust now. And of course, persons will have the opportunity to now keep it as a part of their portfolio, as something to diversify in terms of their investments, right? So that's what we covered today. Thank you so much for watching. Please take a moment to like the video if you found value, and we'll see you in the next Market Money.